Welcome to the January 13th, 2020 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman president, McGowanGroup, with a fast-paced tour of the global financial markets. We began this week with Dow Futures because it shows overnight trading. And this week, of course, the Iranian escalation, de-escalation were the big headlines. What do they tell us about 2020? Well, that's what today's report is about. So keep the pen out. We're going to go pretty quickly through the charts and graphs. Here, the Dow Jones Industrial Average. This is about 28,500 across. And we can see the beginning of the year, the first 2 days of trading, then this week. And if you notice this gap right here, the Dow fell in overnight futures. It's a typical risk-off transaction where institutions reduce their risk at the huge headlines of the Iranian strike. So we went to 28,100 essentially. And so the Dow had dropped about 3 to 4% from its recent peaks. And then it recovered on the de-escalation headlines, and the Dow, the big news of the week, hitting 29,000 by the end of the week. It was a reasonably good jobs report, 145,000 new jobs added last month. By the way, there was a big report on Dallas real estate, the commercial market, one of the leading markets in the country, hitting prices per square foot that are pretty outrageous, at least for those of us that are from Dallas. Now, West Texas Intermediate crude futures, notice this spike to 65.65 at the peak, surrounding the headlines of the strike, and then the de-escalation. Oil actually touching $59 at the end of the week. Not only did it settle down, but what it signaled was that, wow, the traders actually looked at the facts and figures. Well, what did they tell them? Well, Iran only exports 500,000 barrels a day right now, compared to approaching 100 million barrels per day in both production and consumption. So they're a minuscule part of that. Only the disruption of the Strait of Hormuz would be a significant headline going forward on West Texas Intermediate crude, or a strike against the Saudis, like we saw the last time it was above 60. And gold spot, the gold bugs ran for cover. There was a headline I laughed at in the Wall Street Journal that said it was a flight to safe assets. And how safe was it? Well, you could have paid $1,600 at the overnight lows, betting that gold would be a safe place to hide under geopolitical disruption and conflict. Well, actually finishing the week at about $1,550 per troy ounce. I'll underscore that Wall Street Journal headline that said a safe asset. Well, guess what? That asset went from $800 per troy ounce to $250 from 1980 to 2002, losing over 2/3 of its value when inflation doubled prices. So how safe was it? Well, I'll let you be the judge. All right, this is energy infrastructure on a year-to-date basis, having a tremendous rally. Yes, energy does help. It's energy related, but not totally dependent. And the year-to-date return about 2.8%, signaling energy infrastructure. As it reversed in December, it is still on a reasonably good trajectory after this week. Certainly 2.8% every 7 trading days would be great. Unsustainable, but fun to look at. Global high yield, this is one of the major holdings in the portfolio, and it actually had a solid non-volatile week. You're seeing convergence in global yields. That trend will continue, and there is a harvest point for these assets because they're not without price risk. But 2.7% just on price so far this year, plus a nice yield. Those two categories, the energy infrastructure, global high yield, and then of course safety and income, we've got some choices there as well. constructing a portfolio. We've worked with Texas Instruments, Lockheed Martin, Raytheon, United Technologies clients for years. And if you have large accumulated stock positions and you're wondering what to do to prepare for retirement, I call it the tree and the fruit harvest. These were the defense stocks this week. This is Lockheed Martin. You can see it hitting a high of $418 a share and actually sustaining it pretty well in the de-escalation. It's a 6.6% gain so far this year. What does that mean? Well, if you look at an asset where you've got a concentrated stock position, that's a pretty big risk if things turn against you. Ask the TI shareholders, it went from 100 down to below 20, and of course the Nortel shareholders. We still have clients that are retired because we did a nice harvesting strategy before the tech implosion. Well, the defense contractor is very popular. This is a great time to have a scheduled, disciplined harvest after major spikes like we've seen right here. And this is Raytheon under the same premise. You can see what happened during the trading week, hitting a new high of 232 and then settling back a bit under the de-escalation, 4.3%. We'll do one more, United Technologies, a similar spike, but it also means how do you set those target points? If you have a large concentrated stock position, how and when do you reduce risk? How do you capture the benefit of those spikes? It's called the tree and the fruit, and we'll map it out for you. Simply go to networthradio.com, fill out the preliminary client questionnaire, come down to the Crescent. Our new suite opens next week, and that's suite 1776, and we can explain why during your brainstorming session for your investment plan outline. I'm Spencer McGowan, President, McGowanGroup. A pleasure to be with you. Be sure to subscribe. Fast-breaking news like this week and what it means for the financial markets right here at YouTube McGowanGroup. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.